Hey everyone, welcome back to The More You Know, your go-to channel for expanding your knowledge on a variety of fascinating topics. Today, we're going to explore the exciting world of real estate investing. We'll provide examples, practical tips, and precautions to help you succeed in this lucrative investment arena, including an introduction to REITs. If you're ready to dive in and start building wealth through real estate, hit that like button, subscribe, and let's get started. Chapter 1. Understanding the basics of real estate investing. Before we jump into the tips and strategies, let's start with a brief overview of real estate investing. At its core, real estate investing involves purchasing property with the intention of earning a return on investment, ROI, through rental income, appreciation, or both. There are several types of real estate investments, such as residential, commercial, and industrial properties, as well as land and real estate investment trusts, REITs. Chapter 2. Tips for successful real estate investing. Now that we understand the basics, let's dive into some practical tips to help you achieve success in real estate investing. Tip number 1. Research and education. Before making any investment, it's crucial to do your homework. Educate yourself about the real estate market, investment strategies, and potential risks. Read books, attend seminars, and consult with experienced investors to gain insight into the industry. Tip number 2. Choose the right investment strategy. There are several strategies in real estate investing, such as fix and flip, buy and hold, and wholesaling. The fix and flip strategy involves buying properties in need of repair, renovating them, and then quickly selling them for a profit. This approach can yield high returns in a short period but requires significant time, expertise in construction and renovation, and the ability to accurately estimate repair costs and property values. Buy and hold investing focuses on purchasing properties and holding them for the long term, generating rental income and benefiting from property appreciation. This strategy is ideal for investors looking for passive income and long-term wealth building. Keep in mind that buy and hold investing requires property management skills, tenant screening, and ongoing maintenance. Wholesaling involves finding properties below market value, negotiating purchase agreements with sellers, and then quickly assigning those contracts to end buyers for a profit. This strategy does not require significant capital or property ownership, making it a low-risk option for beginner investors. However, wholesaling requires strong negotiation and marketing skills, as well as a deep understanding of local markets. Each strategy has its pros and cons, and choosing the right one for you depends on your goals, skills, and resources. Tip number 3. Understand the importance of location. A property's location is a key factor in determining its value and potential for appreciation. When selecting a property, consider factors such as the local economy, job market, school district, and proximity to amenities. Tip number 4. Build a solid team. Real estate investing often involves working with a team of professionals, such as real estate agents, property managers, contractors, and attorneys. A strong team can help you make informed decisions and ensure a smooth investment process. Tip number 5. Diversify your portfolio. To minimize risk and maximize returns, consider investing in different property types and geographical locations. This strategy can help you weather economic downturns and maintain a steady income stream. Chapter 3. Examples of real estate investments. Let's take a closer look at some examples of real estate investments and the potential returns they can offer. Example number 1. Residential rental property. A residential rental property, such as a single-family home or apartment building, can generate rental income and appreciate over time. The ROI depends on factors like property management costs, vacancy rates, and market conditions. Example number 2. Commercial real estate. Commercial real estate includes office buildings, retail spaces, and industrial properties. These investments typically offer higher income potential and longer lease terms than residential properties, but they may also require a larger upfront investment. Example number 3. Real estate investment trusts, REITs. REITs are companies that own and manage income-producing properties. By investing in a REIT, you can gain exposure to a diversified portfolio of real estate assets without the need for direct property ownership. REITs can be traded on stock exchanges, offering liquidity and the potential for capital appreciation. Chapter 4. Precautions and Potential Pitfalls. Real estate investing can be rewarding, but it's essential to be aware of the potential risks and challenges. Here are some precautions to keep in mind. Precaution number 1. Don't over-leverage. While leveraging can amplify your returns, it can also magnify your losses. Make sure you have a clear understanding of your financial situation and the risks involved before borrowing money to invest in real estate. Precaution number 2. Be prepared for unexpected expenses. Real estate investments can come with unforeseen expenses, such as repairs, maintenance, and vacancies. Ensure you have an emergency fund or reserves set aside to cover these costs. Precaution number 3. Be patient and realistic. Real estate investing is not a get-rich-quick scheme. It requires time, patience, and a long-term perspective. Set realistic expectations for returns and be prepared to weather market fluctuations. Precaution number 4. Conduct thorough due diligence. Before purchasing a property, conduct a thorough analysis to assess its potential risks and rewards. This may include a property inspection, financial analysis, and research into local market conditions. Chapter 5. Understanding and Investing in REITs. Now let's dive deeper into REITs, an accessible way to invest in real estate without the need for direct property ownership. REITs overview. REITs are companies that own, operate, or finance income-producing real estate properties. They are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends, making them an attractive option for income-seeking investors. Types of REITs. There are several types of REITs, such as equity REITs, mortgage REITs, and hybrid REITs. Equity REITs primarily own and manage income-producing properties, while mortgage REITs invest in mortgage loans and mortgage-backed securities. Hybrid REITs combine elements of both equity and mortgage REITs. Investing in REITs. You can invest in REITs by purchasing shares on stock exchanges, much like buying shares of a publicly traded company. Some investors also choose to invest in REIT mutual funds or exchange-traded funds, ETFs, for additional diversification and professional management. Advantages and disadvantages of REITs. REITs offer several advantages, such as liquidity, diversification, and potential for capital appreciation. However, they also come with certain disadvantages, including market volatility, interest rate sensitivity, and management fees. Conclusion. Real estate investing can be a lucrative and rewarding way to build wealth and diversify your investment portfolio. By understanding the basics, choosing the right investment strategy, and being aware of potential pitfalls, you can set yourself up for success. And remember, REITs offer an accessible way to invest in real estate for those who may not want to deal with direct property ownership. Thank you for joining us on this journey through real estate investing. If you found this video helpful, don't forget to hit the like button and subscribe to The More You Know for more informative content. Until next time, happy investing!